Let's turn now to business. Nona Peltier is in the studio with me. Nona, retail property sector, profits are holding steady, you say?
Yes, well they are, and it's interesting because we've talked a little bit about the retail sector being under pressure with consumer sentiment and so on, but look, the companies that own the property where these retail shops are located are doing really well.
So the people who provide the bricks and mortar?
They're the ones who are doing pretty well, which is surprising because a lot of people said, oh, that was, something of the past, that we're all moving online, the Alibabas of the world and so on, but no. There's people enjoying retail shopping, destination shopping. For example, Kiwi Property, which is probably our biggest public company, property investor. They made a net profit of $48.3 million. Now that was flat, but that's because they sold two of their really big properties. They sold the Majestic Center in Wellington, as well as the shopping center in Porirua, which was, I think it's called the North City Shopping Center, yeah. And they sold those, so they wanted to focus more on Auckland, where they have a lot of property, including Sylvia Park, which is the largest shopping mall in the country. And they're saying it's all about diversification as an experience. So you go to the store, you get your food, you maybe get your nails done.
I'm laughing because I know there were people who beg to differ about that, and the ease of ordering something online rather than having to find a car park and navigate your way through hundreds of people.
Well, I'm with you on this, but I tell you what, their profits indicate other people are showing up, yeah. And also Investor, now they have just retail properties, so they own supermarkets like Countdown. They don't own the Countdown, they own the place where the Countdown operates, but also places like Bunnings and Mitre 10s, those kinds of standalone, not retail malls, but those big format stores. They're also doing very well. Their profit was down, but that's because of the valuation gains on the value of their properties, but they still made $10 million in the first 6 months of the year, and that compared with Kiwi Property making 48.3 in the first 6 months of the year.
Big numbers.
Yeah, they're pretty good.
So the outlook for the economy appears pretty sunny, you were telling us, despite some gloomy business sentiment and consumer confidence.
Well, we've had a lot of gloomy business confidence surveys, have we not? As well as consumer confidence. However, the ASB, which do a quarterly outlook on the economy, they're saying, hey, listen, it's not so bad. In fact, all the indicators point to great underlying strength in our economy. Exporters are doing well with the value of our currency. Importers are also doing well. Retail property owners are doing well, apparently. And those indicators show that we're going to be slightly less than 3% economic growth in the last quarter of this year and heading into the early part of next year. However, that's still pretty good, 3% growth. I mean, even Donald Trump would be saying that's pretty good, right?
Speaking of Donald Trump, what's been happening on the markets today?
Well, it's the seesaw of the we're worried, we're not so worried. Asian shares were cautious today, and the Australian market was pretty weak, but our market was doing pretty good. We ended down, just 0.2%. That's a drop of 17 points at 8,793. That compares with the ASX, which was down 0.6%, so quite a lot more. And that's because of those jitters with trade, which way the wind is blowing. And two U.S. Federal Reserve members said that they were worried about global economic growth. More jitters. Anyway, the dollar is steady, trading at 68.5 US cents, 93.7 Australian, and 53.4 pence. There you go. That's it.
Thanks, Nona. Nona Peltier with Business.